Hey guys, Bhuvan here. Today, we're diving into something super exciting and incredibly important. Ever wondered how to grow your money? Like, really grow it? Not just saving it in a bank account, but making it work for you? Well, the stock market is your answer. It's a place where fortunes are made and lost. But with the right knowledge, you can be on the winning side. Imagine your money working harder than you do. Instead of just sitting in a savings account, it could be out there, multiplying. That's the magic of investing. It's not just about putting money in, it's about making strategic decisions that can lead to significant returns. See, when you invest in stocks, you're buying a small piece of a company. You're essentially becoming a part owner of that business. If the company does well, your investment grows too. It's a win-win situation. It's like owning a tiny part of something big. You get to be a part of the company's journey and success. Plus, you can earn dividends. Think of it as a bonus for being a shareholder. It's like getting a reward for your trust in the company. Now, I know what you're thinking. Bhuvan, the stock market sounds complicated. All those numbers and charts can be intimidating. But trust me, it's not rocket science. With the right resources and a bit of patience, anyone can understand the basics. With a little guidance, anyone can become a savvy investor. There are plenty of tools and resources available to help you get started. So, buckle up and let's dive into the exciting world of stocks. Together, we'll explore how you can make informed decisions and grow your wealth. Remember, investing in the stock market is a journey. It's about learning, adapting, and making smart choices. So, are you ready to take the plunge? Let's get started and unlock the potential of your money. The stock market awaits. The stock market. Okay, first things first. What exactly are stocks? Imagine a company like Zomato. To raise money, Zomato divides itself into small pieces called shares or stocks. You buy these shares and bam, you become a part owner of Zomato. Now, there are two ways you make money from stocks. 1. Capital appreciation. Remember when the price of onions skyrocketed? Same logic here. If Zomato performs well, the demand for its shares increases and their price goes up. You sell your shares at a higher price than you bought them. That's profit. 2. Dividends. Sometimes, companies share their profits with shareholders. This share of profit is called a dividend. It's like getting a little thank you gift for investing in their company. Ready to jump in? First, you'll need a demat account. Think of it like a bank account, but for your stocks. It's where your shares are held electronically. Don't worry, opening a demat account is easier than making Maggi. You can open one with a stockbroker. There are tons of them in India, like Zerodha, Upstocks, Grow. Choose one that suits you best. They'll guide you through the process, which usually involves filling out a form and submitting some documents. Once your demat account is set up, you're all set to start buying and selling shares. It's like having the stock market at your fingertips. Before you go on a stock buying spree, remember, knowledge is power. You wouldn't buy a car without checking its features, right? Similarly, research is crucial before investing in any stock. There are two main ways to analyze stocks. 1. Fundamental analysis. This is like checking under the hood of a company. You look at their financial statements, management team, industry trends, and overall performance. It's about understanding the company's intrinsic value. 2. Technical analysis. This is more like reading tea leaves, but with charts and graphs. It involves studying historical price movements and trading volumes to predict future price trends. Don't put all your eggs in one basket. Diversification is key. Ever heard the saying, don't put all your eggs in one basket? Same goes for investing. This age-old wisdom is particularly relevant when it comes to managing your investments. By spreading your money across different types of assets, you can protect yourself from significant losses. Diversification means spreading your money across different stocks and asset classes. This strategy helps to mitigate risk and can lead to more stable returns over time. Instead of relying on a single investment, you create a safety net by having multiple investments. Think of it like this. Imagine you have a garden with various types of plants. If one type of plant gets a disease, the others can still thrive. Similarly, in investing, if one stock performs poorly, others in your portfolio might perform well, balancing out the overall performance. If you invest all your money in just one stock and it crashes, you lose everything. This is a risky approach that can lead to significant financial loss. The stock market is unpredictable, and putting all your resources into one investment is like gambling with your financial future. But if you diversify, even if one investment goes down, others might go up, balancing your risk. This balance is crucial for long-term financial health. Diversification allows you to take advantage of different market conditions and reduces the impact of any single investment's poor performance. A well-diversified portfolio could include a mix of different types of investments that cater to various risk appetites and financial goals. Large-cap stocks like big established companies such as Reliance, TCS, Infosys. These companies are generally more stable and less volatile, providing a solid foundation for your portfolio. Mid-cap stocks, which are mid-sized companies with good growth potential. These companies offer a balance between risk and reward, often providing better growth opportunities than large-cap stocks. Small-cap stocks, smaller companies with higher risk but also higher potential returns. Investing in these companies can be more volatile, but they also offer the possibility of significant gains. Mutual funds, which are a basket of stocks managed by professionals. These funds allow you to invest in a diversified portfolio without having to pick individual stocks yourself. They are managed by experts who aim to maximize returns while minimizing risk. And bonds, which are less risky than stocks and offer fixed income. Bonds provide stability to your portfolio, acting as a buffer against the volatility of the stock market. They are a safer investment that can provide steady returns over time. By combining these different types of investments, you create a balanced portfolio that can weather various market conditions. Diversification is not just a strategy, it's a fundamental principle of smart investing. It helps you manage risk, achieve your financial goals, and build a more secure financial future. So remember, don't put all your eggs in one basket. Diversify your investments to protect yourself and enhance your chances of financial success. It's a key strategy for anyone looking to build and maintain wealth over the long term. Buying and selling. Mastering the art of trading. It's a journey filled with excitement, strategy, and a bit of risk. But with the right knowledge and tools, you can navigate the markets with confidence. Now for the fun part, buying and selling stocks. This is where the action happens and where your decisions can make a significant impact on your portfolio. You can place different types of orders through your broker a market order, where you buy or sell shares at the current market price. This type of order is straightforward and ensures that your trade is executed quickly. It's the quickest way to execute a trade, especially in a fast-moving market where prices can change in an instant. A limit order, where you set a specific price at which you're willing to buy or sell, and the order is executed only if the stock reaches that price. This gives you more control over the price at which your trade is executed. Then there's the stop-loss order, which is your safety net. It's designed to protect your investments from significant losses. You set a price below the current market price, and if the stock falls to that level, your shares are automatically sold, limiting your losses. This can be particularly useful in volatile markets. Remember, timing the market is tricky. Even the most experienced traders can't predict market movements with certainty. Instead, focus on long-term growth and invest in companies you believe in. Research and due diligence are key. Look at a company's fundamentals, its management team, and its growth potential. Diversify your portfolio to spread risk and increase your chances of success. Trading can be rewarding, but it's important to stay informed and disciplined. Keep learning, stay patient, and remember that every trade is a step towards mastering the art of trading. Stay updated with the latest market news and trends. This will help you make informed decisions and adapt to changing market conditions. And don't forget to take breaks. Trading can be intense, and it's important to maintain a healthy balance. Take time to relax and recharge so you can approach the markets with a clear mind. With dedication and the right approach, you can master the art of trading and achieve your financial goals. Happy trading! Keep an eye out, monitoring your investments like a hawk. Investing is not a set it and forget it kind of thing. You need to keep an eye on your investments regularly. Check how your stocks are performing, track company news, and stay updated on market trends. Don't panic if the market dips. That's normal. Remember, you're in it for the long haul. However, if a particular stock consistently underperforms, or if your investment goals change, re-evaluate your portfolio and make adjustments accordingly. You got this. Investing for a brighter future. So there you have it. A crash course on the stock market. It's not as daunting as it seems, right? Remember, starting small is key. Invest what you can afford to lose, be patient, and stay informed. The stock market is a powerful tool for wealth creation. By investing wisely, you're not just growing your money, you're investing in your future. So, what are you waiting for? Start your investing journey today.